Hey traders. Okay, so in this video I want to discuss trading specifically the New York session, and for binary traders, Forex traders, and also Nadex traders, you can apply what I'm about to say. Now, out of the three sessions, my personal opinion, I think, is that New York possibly will be the easiest one to analyze and trade, right? What do I mean by that? It's when I suggest to you guys that you should look at the markets from a weekly or a daily perspective at the max, right? Weekly is fantastic to see how the cycles fit into your week. But when you then are breaking down your trades into your days, then I would suggest probably New York would be the easier one to trade. And here's my example as to why. Okay, so because the thing is, usually the Asian session is well known to consolidate. Why? It's the accumulation phase. What happens is that most of the orders that come through with the dealing desks, they'll let those orders accumulate, and the release won't happen. What you'll end up seeing most of the time is that after the big move that's happened in New York the previous day, the second half of New York will go into like a free ranging period when there actually is no dealer on duty, and then the market most likely will do a bit of a bounce during the Asian session, and then it will just go into like a range that will continue on, most likely towards the end of the Asian session, and then go into creating somewhat of either a false move, a spike off the 200 or the 50 in the London session, and that's if the market has established its pattern, right? So in this case, if you have a look at what the markets are doing here, what you'll find very quickly is that, see, exactly what I was saying, where the market goes into consolidation mode from the middle of New York, and then judging by what it's doing in relation to the EMAs, in this case, see how you get those little bends happening? You get these bends happening here, and if it's very close to the EMA 50, you sit back and you watch for the market to move, right? And this is, we're still specifically talking about New York traders here, but what I'm suggesting is that when you come into doing the analysis, you're going to look at your charts across from early Asian session, London session, and then go into what the New York market is presently doing. And what I'm about to say to you applies to the first 90 minutes of the New York session. Okay, if you don't get your significant setup and move happening in the first 90 minutes, don't waste the rest of your day. Go and do something else. And how you would actually make that judgment within the first 10 minutes or so of whether or not you have a setup is by analyzing the Asian session and then the New York session. The London session. So if you look at the week and then how the market has moved in particular directions, and then you're expecting that the market is doing somewhat of a midweek reversal, and then market is going to possibly reverse direction and go the opposing way for the remaining duration until Thursday or Friday until it corrects itself. If you kind of have that image already sorted in your head, then what you're expecting is market consolidates or does some sort of pattern establishment on a during the Asian session, follows, bounces off the 50 or the 200, goes into somewhat of a direction during the London session, right? Now, if you've then done your analysis of support resistance, if you've got your trend lines in place, you patterned, everything sorted, then what you most likely will find is within the first 90 minutes of the New York session, you're going to get a false move in the wrong direction before an aggressive move in the right direction. So in this case, it's where the market bounced off, and we were actually, this is not the best example. The reason why is that we were expecting, I was actually expecting this, and I've already discussed this in a previous video. This one is a clear example. Market does its pattern, comes back off, and we're looking for behavior of the EMA 50 or the 200 at the open of London. It gives us that behavior, bounces off, goes up, consolidates. What we're expecting is New York to open and the false move. The market's going to move in the opposite direction of where it's been coming from. So in this case, it's going up, comes back down, and you don't actually take a trade straight after the doji. you're waiting for the bounce. Remember the bounce. If you get it off the 50, fantastic. Wait for the bounce, and the combination of these three candles here will be somewhat of a Morningstar pattern for you. Where would you take your entry off the next candle, right? Just be expecting that there is going to always be, when the market aggressive moves especially, there'll be somewhat of the market stalling. So don't panic if you get in here, and this is to do with Forex. If you get in here and market pulls back briefly before it goes back up again, right? So which pair is this? Euro USD. In an hour, you're roughly about 17 pips in the money. In 1 hour 45 minutes, you've hit your 20 pips, right? So that's how you do it. Where and the rules here really is that, again, if it fits into market cycle and you have that the market moving in a particular direction, what you're doing is you want that wave to be established. The market's going to give you a nice wave and then bounce, right? Wait for the bounce to happen. The AUD pair yesterday was beautiful. And this is clear again. So you come in, you wake up early New York session, and you're expecting something, right? So you look in and you're scanning your charts and you look at what the market did during the Asian session, especially when you're doing your analysis and say, okay, it moved up most of the day. It's actually reached its high, hit support and resistance zones, and it's reversing, right? So here what we're doing is saying, okay, Asian session opens, comes down, consolidates, comes down, goes up again and starts consolidating again. You wake up and you're now expecting that trend continuation is going to happen, and that's the best sort of setup that you ever want to trade, especially with New York. So in this case, what you're expecting is a false move. So market goes up, consolidates, and then the false move realistically hits our 200, bounces down. Where would you take your entry? You could take it here, or if you really want a stronger confirmation, wait for this one to go down and take it here. In 15, 30, 45 minutes, you can get anywhere up to about 30 or so pips, but you could get out. When candles are moving aggressively like this, hey, you can stay in there for as long as you want to, right? But you can capture more than your 20, 25 pips. But certainly, if you've got your set number of pips, capture that, get the hell out of there. And that's basically all you're going to do. Right, so let's scan some pairs and get more examples off of this. Okay, when markets are just doing their sideways thing, forget about it. Well, this is not very clear as well. And I'm trying to make it simple here. So like say for instance, the market's doing its own crazy stuff and you're really not sure as to what it's doing, avoid it. Right. This is another one. It's establishing a double top in the Asian London session. You wake up, you come down, and then it goes boom back up again. What you could do is wait for this. This is, remember, the first 90 minutes where the market goes false move up, comes back down again, and this goes below the EMA 50. You could take your entry straight off here, right? The next candle, because it has penetrated past this. You could also look at for binary traders. Trading this, when price pushes back up, you draw in your, let's draw our fibs. Okay, so that would be the high. That would be the official low for us. So at any point in time after this, when your 50 gets hit, you can take that trade. Okay, let's get rid of this. But that's the false move. You've got some sort of like trend directional bias. It hits it, comes back down. But we just saw a very nice, easy example here where you see Asian session starting off. It's bouncing off the 50, bouncing off the 200 here as well, somewhat ranging, consolidating. Okay, bounces off the 50, breaks the 200, goes up, consolidates. What we're expecting, this is somewhat of like a continuation. We're expecting similar sort of behavior in the first 90 minutes or so. So here we've got 1, 2, 3, 4, first hour. See 90 minutes here. And then aggressive move off the 50 up. That is your confirmation. This big green candle is your confirmation. Let it finish. Let it finish. Take your entry off the next one. In what pair is this? Euro JPY. You've got 20 pips off just that one candle. All right. Binary traders, take your entries off these candles here. you could just jump in blindly because this is moving, or you could wait for the wicks to come down, which would be better. You get your confirmations in. Nadex traders, as soon as you see this bounce here, start calculating from wherever the market is right now, possibly find a out of the money a spread of about 10 pips or so, and jump into that one. So you will be 10 pips out of the money whenever you take your entry, but you know that within 2 hours this market will be well and truly in the money by then, right? So that's how you take your Nadex entry. Okay. Okay, here's another one, another example. Market is a strong trend going south, right? Market's continually coming down at the open of New York and then stalls, and then market goes back up again, right? What we're doing here, because this is a continuation that's going on, what we're expecting is a false move up, and then market starts to come down. Now, if it's starting to get too late, you really decide whether or not you want to take that entry, and it's also dependent on currency pair. So let's have a look at USD JPY, because hey, here's a beautiful one that happened yesterday, because of you'd have more volume with USD pairs. Market opens, comes down during Asian session, comes back, bounces off the 50 for us, goes down again, breaks past the low of the Asian session in London, consolidates. What are we expecting? We're expecting market to go back up, hit the 50, and then bounce again, right? Once it does the bounce, this is your false move, then your bounce comes down, and this is our confirmation, right? You can take your entry off this candle here. For those of you that would have traded this one binary wise, this is, remember, wick to the 50, you probably would have won that one. But remember, where price opens, you want to have a price in this case above the EMA 6, Babon slope, and also the 50 line. So here's where you would have taken your entry. Chances of that really breaking past, high. But remember, above the body of this one, and in this case, because the 50 is so close, wait for the 50. Wait for your confirmations. If the 50, if there is a trigger line somewhere there, and by that I mean to say the 50 or the 200, then chances are price may break up close there. If I had the 200 down here, there's no way in hell I'd probably trade the 50. Right? The other thing that I want you to be mindful of when you're doing your fibs, you can actually utilize these waves as your highs and lows. You don't have to really go back to the official high or official low of the entire day. So in this case, I'm just going to utilize this bit here and analyze how that trade would have panned out. So here again, see that 50 line? Again, you'd wait for Babon slope line, and this is for binary, Babon slope line. This, your 50 to be hit, and price does come just slightly above the 50 fib line, right? So these would be your buffer zones, and you'd wait for price to hit the 50 before you take an entry. So that whole area here is your protective zone where you don't get screwed by the market, all right? Okay, so once again, you're expecting New York, and this will only take you less than about 10 minutes. If you've done your analysis for the week and you kind of know the directions the markets are moving in, if you come in early New York and just five minutes, scan through all your currency pairs and see if the market is giving you nice waves, and if it is, remember, if it's patterns that you're getting where the market is doing this and then you get a nice swing low here, straight away, which no swing to the high, and you need to abort your entries, because what you're going to do is to say, okay, I now want to wait, and what you'll do also is, if there's a nice flow like market coming down, you'll start using your trend lines. Start putting in a trend line to see if this is a market break. If it is a market break, then in this case what's going to happen is that market will probably go spike like that, go break it, and then go back up, right? So just be wary of that. But in this instance, this is clear to us that this goes straight, consolidates, goes up, hits the 50, and then it comes back down again. So we're looking for our entries off here. This, they're going to throw these sorts of candles in there at times because they want to confuse people. If it's too easy for you to kind of know this, And you'd be surprised the simplicity of what I'm actually telling you guys. How many people don't actually know this? I know traders that are using all sorts of indicators that make very good money, but they don't have any clue as to this actually ever existing. And it surprises me, but this is how easy it can actually be. In this case, consolidation. Consolidation just happens, and if you ever get these aggressive candles, be careful, because a lot of the times they can be the false moves, right? Just be careful with them. See, if it's this sort of stuff where you're kind of not entirely certain, if you get where one area is being hit multiple times in multiple sessions, you're looking for a reversal. Okay, this is like a triple bottom that's been established here. Go into a higher time frame to see what that looks like, and also analyze that in line with what the market is doing throughout the week. Okay, but the easiest ones, like I said, is the ones where you've got some sort of directional flow in the market going in from Asian session. In this case, look at this. This flow happens, the 50 and the 200 cross. It's just bouncing off the EMAs. So what are you expecting the first 90 minutes? You're going to see a bounce, right? After all of this, yep, you could trade that. And again, the difference between this and what we just saw earlier is where there is a directional flow. If it's just consolidating like this, and you'd also analyze to see where the markets come from. So if it was just consolidating like this and the market has come from here and establishes some sort of a pattern midweek, it goes like a pattern like this, goes up, and then you see the 50 and the 200 cross, well, in that case, it is an extension going up, right? So in this case, you've got a double bottom, market comes back out. If you use your fibs as well from this low to this high, see this? This is a bounce off your 61.8 during the early Asian session. So this is another confirmation this market's continuing to head up for us. And this is a Morningstar pattern. For Asian traders, you could take your entries off here, but for New York traders, this is your confirmation, right? So you're looking at this early and you're saying, yeah, I know what this market is about to do. I'm expecting a hit to the low, a hit where? Somewhere very close to our 50 and our 200. Right, so if you get a hit to a low, you get particular candlestick patterns, your Morningstar patterns, your spikes, that sort of stuff. If you're getting that around the first 90 minutes, and also the neutralized news as well. So if there's some heavy releases coming through and the market is behaving in a certain way, you're expecting that what they're going to do is, if you're expecting bad news, then they are going to use that to do a stop hunt. If not, if it's good news, then they'd probably do the stop hunt prior to that and then spike the market up, right? You're always going to see instances where even if the news is good, they'll still do the stop hunt, right? Even if it's like, say, USD JPY pair and it's good news for the US, you'll probably just see a spike and you'll start to see some volatility happening. You'll see a spike to the low before the market starts to head up again. So that's how you'll make those judgments. But going back to point again, and I'd like for you guys to go out and study, those of you that do trade the New York session, go study the first 90 minutes of the New York session, but study it in relation to what the market has done in the Asian session and London session. And if you actually see some clarity in its directional move, then perfect. So if you get a handful of currency pairs, and you've got your market cycles for the week kind of sorted in how you understand them, then the easiest thing for you to do would be wake up early US time, whatever time, New York time, and in the first 90 minutes, at some point, just spend 5 minutes going through your currency pairs and looking to see if there is a directional flow, and then and write it down. USD JPY, I'm expecting a hit to the low before the market climbs up. And then do the same thing with your other currency pairs. If you've written all of them down, then what you can do is come back within that 90-minute period, maybe just have your laptop or computer open, whatever you're doing, even if you're at work, just have your home laptop sitting on your desk somewhere, and in anticipation of this move happening. So as soon as that move actually happens, look for your entry. And if it's not happening, if you have a look to see and there's nothing really clear in directional move, screw it. The reason why I say it, because you will get constant opportunities the next day, the day after, the week after. It's going to be there. And if you're just doing your 20, 30 pips at a time, multiple times a week, 2 or 3 times a week, you'll have that consistency to say, I can make a crap load of money in the next one. It doesn't really matter. Okay? So that's how you approach your New York sessions. And once again, binary traders, once you've seen this setup, the bounce happens. That's when you're looking for your entries. With Nadex, you see the same bounce. You're looking for contracts that are possibly about 10 pips out of the money. Because remember, you're expecting that the market's going to move up about 20 pips or so, again, depending on currency pair. So if you're expecting market's going to move up about 20 pips, and that's what you want to collect, right? Your 10 pip mark is going to be in the middle somewhere. So the purchase, the entry into your contract, it wouldn't be that much. So you'll be able to get the cheaper ends. All right. So it's like the amount you're risking in order to make the significant dollar value is less. And the beautiful thing about trading Nadex with this sort of a setup is that you can actually write the whole entire contract out instead of having to sell it off in the middle with a minor profit. Okay, I hope that makes sense. I don't want to do too much more. Let's just have a look at USD CHF just in case. In this case, look at this. This was a directional. We'll come back to this one. This was a directional move here in London session, but notice how I was saying you're expecting a spike to the low if the market's going up. If the market doesn't give you a spike to the low and gives you a spike to the high, wait. Wait for this pullback to happen. And see, notice how here this candle comes in. You still want to be careful. Remember, you're training yourself to being able to dump a lot of money on there and not to flinch. Don't be scared about it. So you will wait then for this candle to finish off. See this spike to the high again? You get that spike to the high, that's your confirmation, and say I'm in. All right? See these little dojis here? I love these candles, especially after a directional move has begun, because that's where it gives me a chance to enter into the market. Because now, if I was scared here and saying, I don't want to put 10 lots onto this, I'm really not sure if this is just going to go back up, and this is going to end up being a continuation pattern. Because at some point in time, this would have been a nice long green candle, right? And you would have thought, shit, if you would have jumped in here, you would have thought, shit, I have jumped into a continuation pattern, this market's going this way, right? But because there is no hit to the low, that's your first point of confluence. The second thing is, then you say, okay, I'm going to sit back and I need more from the market to say, you convince me that you're heading in this direction. See how we're kind of shifting the psychology? It's not about where you against the market anymore. It's almost like that market is that girl or boy that's chasing you in the playground because they want your attention. Treat it like that. So in this case, say, yep, screw you. I don't know what you're doing right now. Wait for the market to give you something more. And if the market pushes down here, by the time this is like in the last 10 seconds, it's a nice red candle, you have a smile on your face. Because now you know what this market is doing. And if you then align this with market cycles, what's been happening, what day of the week it is, what's happened previously in the previous day, then you can say, yep, I am going to take my entry here. And in the first 30 minutes, you'll be 15 pips in the money. By the time this wick is at the low, you will be 20 pips. If you apply spreads and stuff, then you probably just be under 20. You make a decision. And then the next candle, you do come down to easily being in 20 pips in the money, right? But then there was another one here with this example that was beautiful. Market, see how Asian session, it just does its thing, comes back up very comfortably to hit the 50, and then it pushes down again. You don't want to get an entry here. London traders or Asian traders, get an entry after this candle. You can wait for the confirmations. Why? Because look at this. Losing this 2 pips is not really going to break your bank. So you can wait for the confirmation, and you can be a snob and play hard to get from the market and say to the market, hey, you know what? You chase after me a little bit longer, another 15 minutes before I enter. So you enter on the open of this one. See how then this writes for 40 pips. But you're smart, right? So you're going to get out at 20 pips. You're done. But New York traders, here's what you're expecting. You're expecting the market to come down, and what's it going to do? False move back up, right? It doesn't go up to the 50, but it gives you a candlestick pattern here. right? These three candlestick patterns, I love them. Remember pin bars and stuff I was talking about. Pin bars, your like particular behaviors around EMAs, they have to happen at specific times and specific areas for you to take notice. If somebody, I know people will be saying, but Shiva, you can't get pin bars all of the time and they'll be accurate. You're right. But I'm not saying where you trade on every pin bar. I'm saying wherever you get pin bars in specific areas. So in this case, at the open of the New York session, after a directional flow, after a false move, you're expecting something as comfortable as this. What would you do? You will take your entry at the open of this candle. You're out of the money for 5 pips for the first 15 minutes. You can put your fibs in and look to see if you've got a binary entry there. But within the next 15 minutes or so after that, you would be 15 pips in the money. It will take you a little bit of time before you come into 20 pips, right? And when I say a little bit of time, we're talking 2 hours, right? When you're in the money like this, you decide whether you want to stay in or you want to scratch it. It's up to you. And this is the reason why, like, you got to know yourself. I know I don't have patience. I'm not going to sit here and nurse a freaking trade for 2 hours most of the time. So I will see like the AUD JPYs, the Euro JPY pairs, where I'll see the entries and I'll say, I know they're going to move in a particular direction, but do I really want to sit there for that long? I don't. So I will primarily, it's not to say that I won't, but I'll stick to my pound pairs, which will get me nicely in the money in the first 15 minutes, 30 minutes or so, right? But for those of you that are seeing and scanning these setups, this is what you're looking for. Nadex traders, when you see this setup here and you're here somewhere, again, 10 pips, right? So somewhere 10 pips out of the money. By the time this candle is doing its thing, by the time this candle is doing its thing in the first 30 minutes, you would have been in the money by then, right? If you're getting great rates on selling that contract, do it. If not, you probably just wait a little bit, but in 2 hours, the market does finish in your favor, right? So that's how you trade Nadex as well. All right, so again, last thing, just to simplify again, don't want to confuse you guys. Directional flow, Asian session, London session, in line with the market cycle. Day of the week, take notice of all of that. And then false move early in the New York session, the first 90 minutes, candlestick patterns around those areas after the false move. And also if it's a hit to the 50 or the 200, even better. You're looking for nice wicks. You're looking for those morning start, evening start type of patterns. What else can I say around those areas? You kind of you will learn to kind of understand that behavior. And then you want that confirmation, aggressive move south. So in this case, aggressive move south. Wait for this candle. Too many people see this, the finishes, and they're jumping in early. You can, and in some instances, you'll be great. You'll be lucky. But you're screwing with yourself here. Because what if this candle just goes back up and this is somewhat of a continuation, and later on you'll be like, ah, crap, I missed critical analysis from the previous day, which would have said that this is now bouncing off here somewhere. Or say, for instance, there's a critical a zone that's here, because this would be a morning star pattern, right? So say, for instance, if there was a support zone that was here that was hit like 3 months ago, what if you had something along those lines and you didn't pay attention? So for that reason, wait for your confirmation. Confirmation is king in my opinion, right? Okay, and that's how you trade New York session. All the best. And look, if you guys want to send me expensive presents, I'm up for that idea. All right, thanks guys.